Hi, I'm Jeff Tucker, the principal economist at Windermere Real Estate, and these are the numbers to know right now. First number this week, 12,000 with a big asterisk. That's the number of jobs the economy added in October, and the asterisk is there to call out how this month's jobs report was impacted by hurricanes Helene and Milton. The Bureau of Labor Statistics even included a special note at the top of this month's employment situation report, highlighting the fact that this report was based on the first survey of employers since the hurricanes struck, and response rates for their survey were unusually low. They also emphasized that it was not possible to estimate how much the hurricanes reduced the headline job growth number. Nonetheless, economists have been expecting about 100,000 more jobs than this to be added, even knowing that the total will be reduced by the hurricanes and the ongoing strike by workers at Boeing. And further, in this report, they also revised down their estimates of job growth in August and September by a combined 112,000 jobs. Now, just as a reminder, the Bureau of Labor Statistics always revises the previous 2 months of data in every monthly jobs report. So that's normal, but the direction of it downward is is interesting information that kind of helps us temper how optimistic we might have been about the economy coming out of the September jobs report. So all in all, it is hard to interpret this month's jobs report given the noise around the hurricanes. But on balance, it makes me revise my impression of the labor market a little bit downward. One very likely takeaway, though, is that the Fed is now viewed as almost certain to go ahead and cut their benchmark overnight interest rate by a quarter point at the next meeting ending on Thursday, November 7th. That will continue the normalization process for short-term interest rates, although as we saw in September, cutting short-term rates is not at all a guarantee of falling mortgage rates. All right, the next number to know this week, 10%. That is how much pending sales grew in October from the same month 1 year ago, according to the latest data from Realtor.com. This is a strong data point, confirming that the housing market saw an upward surge in activity here in the first half of the fall season. I think the most likely reasons for the bump in pending sales included a healthier supply of listings for buyers to choose from, and I believe a lot of buyers woke up to the news that interest rates had fallen over the year, especially in September, but even still in early October. Looking ahead, we're now going into the coolest time of the year for home sales, just seasonally speaking. And unfortunately, the recent rebound in mortgage rates is likely to help put the market back on ice, more or less, for at least a couple of months. Which does bring me to the final number to know right now, 7.09%. That is where the 30-year mortgage rate stood on Thursday, October 31st, according to Mortgage News Daily. It's now up almost a full point in just 7 weeks from its low on September 17th. The upward movement in the last couple months is a pretty surprising trend break after it declined by more than a point from April through September. I think it reflects the strong economic news we've gotten lately about job growth, especially in September, as well as very strong annualized real GDP growth of 2.8% in the third quarter. I've mentioned before that election uncertainty may be contributing as well, and that theory will be put to the test as we wait to see what rates do after the election. That is all for this week. Thanks so much for watching, and don't forget to subscribe.